Hello everyone, welcome to another weekly Outlook video. We are starting a new week. For those people who are new, welcome to the community. Subscribe to this channel. So we're going to start with DXY, and for those people who followed my last week weekly Outlook, you realize that we actually got our bias wrong. And normally anytime we have a week where we are not getting the bias right, what I do, I redo the analysis from the higher time frame. So remember when we were starting the month, we started our analysis from the monthly time frame, right? So of course, as the month proceeds, we are just looking at only the weekly time frame. But now, because we have a week where we got our bias wrong, or the bias did not go as we had anticipated it to, so it's good to go back again to the higher time frame, in this case the monthly, and just try to identify exactly what the market is doing. And so that's what we're going to do with DXY. We're going to start with the monthly time frame. And if you look at the monthly time frame, remember when we started January, the first week when we were doing our first analysis this month, we actually looked at this inversion fair value gap here. And at some point, this was our draw of liquidity for price, as you can see, which price finally got to, and we had all this. So all this at some point was all a bullish candle. And I remember I told you guys, if you're going to get a bullish candle close above this inversion fair value gap, then we should expect bullish moves, and there will be a high probability that the market is going for this uh, fair value gap here. But then clearly you can see it looks like the market is going to respect this inversion fair value gap, because you can see we tagged this was just a week. We did not price did not violate this inversion fair value gap. Remember, in violation only happens when you get candle body closure through the PDRA. So in this case, we do not have a candle body closure through this inversion fair value gap. If anything, it got tapped, and right now we have this bearish move. So clearly, this market is bearish. Looks like now price is just using this to push price lower. And if that is the case, of course, this is the first sell side liquidity which price has already taken. So the next liquidity that we have is this right here. So this is 2025 low. Yeah, so that is the next draw of liquidity that I see on the monthly time frame. So if you look at the weekly time frame, you can clearly see, of course, last week we had all these explosive bearish move, and in the process, price inverted this fair value gap. So already we also have a weekly inversion fair value gap, and this right here is an order block. So do you see these consecutive bullish candles? The moment we have a candle body closure below this low, already this forms an order block. So if we are going to have a retracement before we continue with the bearish move, uh, this is a nice level if the market can get to these order blocks. But again, it's not a must for the market to give us all that retracement. The market can just open and we still continue going bearish without even getting to this order block here. So if you look at the daily time frame, of course, clearly you can see all this bearish move that we have. Now, the weekly order block is right here, and we do not have any other PDRA on the daily time frame apart from this order block here, which is in line with the weekly inversion fair value gap. If we take a fib tool, if you're going to have a retracement to 50% of this range, so you can see 50% of this range is around here. Personally, I would really love if we get a retracement before we continue with the bearish move. But the market is the market. The market can do whatever it wants. We can open the week and just have a bearish Monday forming a fair value gap. Then price tags the fair value gap in the course of the week and we continue the bearish move. Then we fail to get to this weekly order block here. So that is still a possibility, and that is okay. So let's look at USDCHF. So USDCHF and DXY are positively correlated. So if you study the monthly time frame, of course, you can see this is what we have last this month, and of course, it looks like it's bearish. And but you can see, of course, USD CHF we've already taken September 2025 low, but DXY price has not yet taken 2025 low. So if you look at the weekly time frame, same as DXY, we have this inversion fair value gap here. Then also there's an order block here. So that's all we see on the weekly time frame. So if you look at the daily time frame, again, the same thing as DXY. So we have the weekly order block here, weekly inversion fair value gap there. So either we get a retracement to tag this before we continue going lower, or the market just opens. If the dollar is really weak, you might even just open and go lower. Okay, but it would really be nice if the market gives us that retracement before price continues going lower. So let's look at GBPUSD. So GBPUSD and DXY are negatively correlated. So if you're going to have a weak dollar, then you expect a strong GBPUSD. And in this case, you can see this is what we have. Of course, price tag this fair value gap. Then we've been having this bullish rally all through. So this buy side liquidity is a good first level to look at, but then the final target, this looks like a good final target for the market. So if we look at the weekly time frame, you can see we have this order block here on the weekly. The same way we have order block DXY. So that's all I see. Let's look at the daily time frame. So if you look at the daily time frame, clearly again you can see it's just it's been strong bullish. So this is the weekly order block, and the only key level here we have is this fair value gap. So either the market opens, just have a slight retracement and continue with this bullish move, or we get a deeper retracement. So if you're going to continue with the bullish move without price retracing to a daily or a weekly key level, if you can identify a 4-hour key level, then the market is going to use that. Let's look at EURUSD. So EURUSD and DXY are negatively correlated. So if you expect a weak DXY, then expect a bullish EURUSD. So in this case, we have this. So this is the weekly time frame. We have an order block here, and we have a very tiny inversion fair value gap right here. So again, the same thing as the rest. Either we have a retracement to this weekly key level, because it looks like so far this looks like the nearest key level that we have. We'll look at the daily to see and continue bullish, or we just open the week and we go bullish. So I see that. So if you look at the daily time frame, you can see the first key level or PD array that we have is this order block here. So the weekly key level is actually more nearer than the daily key level. So again, the same thing. Either we open the week and the market is retracing and we continue bullish, or we just open the week, the market uses a 4-hour key level as support, uh, then the bullish moves, and we just have that more bullish continuation. So let's look at the yen basket. So yen has really been weak, bearish, bearish, bearish. And of course, finally, price took this 2024 low, and this is what we have January. And so far as you can see, this market has just been bearish from September. Yeah, September, it's just been going lower, 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 lower. Now, we have this, of course, monthly fair value gap there. And right now, we're still not done with the month yet. We still have 5 days left. So this might form a fair value gap, or it might fail to become a fair value gap. But as far as I've been looking at this yen basket, I've been anticipating or looking for retracement. If this market is still going to continue going lower, I've been really looking for that retracement, but clearly you can see this market is still going lower. So if you look at the weekly time frame, you can see price took out previous week low. As much as it's a bearish week, it's still not a solid. We're not getting a bearish candle that actually closes below this low here. This candle is still closing right here, and all this is a week. If you look at this move, all this move here, it's clear this has been bearish, 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 and there was momentum for this bearish move. But if you look at this clearly shows that there's some slowdown in the momentum, and that is why you see I am still not in a rush to continue looking for more bearish moves for yen basket. Of course, yen is negatively correlated with GBP JPY. We will look at that. So if you look at the daily time frame, of course, this is liquidity sweep. We had that, and then we had all this bullish move on Monday. So we have an order block right here. So now, if the yen is going to be is going to give us bullish moves, then this is a good key level that the market can use, the order block, to push price higher. However, if it's going to continue going bearish, then of course we'll see that uh, the market is likely to open and we just can even sweep this high, but you'll clearly see that the market is bearish because it will give you bearish. So let's look at GBPJPY. So GBPJPY and yen basket are negatively correlated. So for GBPJPY, this is a 6 month fair value gap that we have right here. So as much as I want to see a retracement for yen basket, same for GBPJPY, I will not just work with what I want to see. I have to work with what the market is giving. Okay, so far you can clearly see it's been bullish, bullish. On the monthly time frame, we have this fair value gap that is forming, not yet formed, but this is likely to form once we close this month of January. So this is what I say. If this market is still continue bullish and the yen is still weak, then this 6 month fair value gap could be the draw of liquidity for price. So if you look at the weekly time frame, again, guys, I've been looking at this weekly fair value gap for the longest time. I wanted to see the market retrace to this weekly fair value gap, or we get that retracement before we continue. But clearly, you can see this market has just been bullish, bullish, bullish. So I'm not going to trade against the market and do what I want to see the market do. So at this point, of course, here the only key level you have, of course, is that, and now this. And if the market is going to continue bullish without getting to this point here, then this can be a good level that the market can use for that bullish move. So if we look at the daily time frame, so far we have an order block. Yeah, so this is a daily, all these consecutive bearish candles, we can use them as an order block, right? You can see we close above it, and then so this can be more of a retracement. And of course, this in the process we also have some gaps here, volume imbalance, which you can see was tagged by price on Friday. So if the market is going to continue going higher, so this is a good level the market can use to push price higher, or the market can have that deeper retracement to this weekly an order block before we continue with the bullish move. So that's one way I see it. If GBP is finally going to give us that retracement that have been anticipating, then so far we have liquidity sweep. All this is more of a liquidity sweep. So we sweep all these highs. Then it would be nice if we get you will just see we'll get another Monday can be bearish. We get a bearish candle forming order blocks and key levels that we can anticipate the market will use to push price lower. So if we look at gold, of course, gold, it has been all-time highs. It's been bullish. This is all we see. Let's look at the daily time frame. So on the daily time frame, you can clearly see the first key level that price has, or the first PDRA, is down here. This fair value gap here. Okay, there's also a tiny fair value gap here. So let's see. Oh yeah, and this tiny fair value gap here. So either the market uses this to push price higher, or you have if the market violates this, then there's a probability that it's going for this low. And of course, you have seen how gold at times the wick just opens and it's already moving. So the market even fails to retrace to the previous week key level. Instead, for the new week forms its own PDRs that the market uses to push price higher. So that is also a possibility. So let's look at NAS100. If you look at NAS100, starting with the weekly time frame, no key level as of now, right now here. The only thing we see is price has taken this liquidity, and that's all we had. So if you look at the daily time frame, there's this gap. There we go, which price of course filled it completely, and we're even getting candle body closure through it. And price, there's an order block here, and there's a fair value gap here. So these are the only PDRAs that we see here. So if this market is to continue with the bullish momentum that we can see here after sweeping this liquidity, and you have that, then this can be a good level to have that retracement before we continue, before the market continues bullish, and you'll be looking at this high here. That will be the first target if the market will continue that momentum, or you get more bearish moves, because you can see clearly this market is more in a range. So that is all I prepared for this weekly outlook video. If you enjoyed this video, don't forget to give it a thumbs up. If you have not subscribed, subscribe to this channel. I'll see you in the next one.